Good morning, listeners. It's the last day of the month with some good updates lined up for you only in Almus Market Mornings with me, Shikhar Garg. Now, we've had the German inflation data released yesterday, which had put the bond markets in some bit of an action, a good decline on month basis, but not so much of a reaction have we been visible when it comes to the currency on the euro front. This drop in inflation, JK, is it really good sign or just some temporary blip due to base effect? And we are yet to see a lot many things unfold. As you know, we've also been talking about the Powell speech today along with the GDP data release. So all in all, Chinese unrest, GDP data release, and German inflation. What's your take, JK?
Yeah, good morning. Inflation in Eurozone dropping in some of the member countries, it's definitely a heartening development for ECB, particularly German and Spanish inflation showed a substantial drop yesterday. Spanish inflation was 6.8% year on year in November, from 7.3 in October, and it is the fourth consecutive month of drop in price pressures there. In fact, Spanish inflation was above Eurozone average for several months, and now it has been dropped below the region's average. On German side, year on year came at 10 versus 10.4, and the monthly drop was as high as 0.5%. So we have had state level inflation data from the two major countries, but they have been, although enough to inject some optimism that a peak in inflation may have been seen. It's still early, given that inflation data from other major Eurozone countries are yet to be published. We will have the Eurozone as a whole inflation today, apart from the French inflation, and I think after that we'll get. But market pricing looks like it's more leaning towards 50 basis points now. Certainly, in fact, Asia also gave further evidence that the global inflation pressures may be easing, with Australian monthly CPI today coming at 6.9% year on year versus 7.4% expected. But yesterday was quite different from what we saw on Monday, because the risk-off sentiment that started on Monday was kind of reversed in Asian time, with the sizzling performance from Chinese and the Hong Kong market, driven by two important factors. One was the hope that Chinese authorities would further relax the zero COVID policy after the weekend protests. We have been saying the rare protests in China, though not in good taste, would ultimately lead the politicians to reconsider a positive response. They assured to speed up vaccinations for elderly people. And the other important reason was taking bolder steps to rescue the real estate sector after the piecemeal approach they had been following so far. The composite index in China went up by nearly 2%, and Hong Kong went up by 4%. But Wall Street did not get much inspiration from these stocks moves. And in fact, S&P and NASDAQ ended with losses after corporate negative news and also caution ahead of Powell's speech. Yuan, of course, had appreciated during the day, with the onshore unit rising as much as 1.2% against the dollar. And that puts the currency back on track to strengthen more than 2% for the month, actually, for the entire month of November, following big losses that it had seen in the recent months. On the yield side, European yields dropped after the data, particularly German and Italian, but US yields remained supported, having already fallen quite a bit from the highs and awaiting more clues on the macros. Stocks were relatively unmoved in other regions, with investors sitting on the hands before a huge data pile in the coming sessions. A bit of setbacks on the global, relations, with the UK Prime Minister saying that the so-called golden era of relations with China is over, warning that Beijing's move toward even greater authoritarianism posed a systemic challenge to Britain's values and interests. So while it is, not so significant immediately, but it's in the overall scheme of geopolitics, it has to be somewhat viewed carefully. Also coming up, OPEC meeting on December 4th. Now the view is emerging that OPEC may ultimately not cut the output as was being indicated earlier. But the prices in crude oil have definitely risen after positive indications from Chinese authorities. We have big events ahead. Although not much impact from the data yesterday, the GDP data today for Q3 in US expected 2.7% after 2.6% last month. Jolt's jobs opening data expected to have dropped. Then European side, we have German unemployment in Eurozone flash estimates. The most important event to watch would be the Powell speech in Washington. And looking at the easing of financial conditions, stocks and bonds rally, while the inflation still remains at multi-decade highs, although somewhat moderated. Powell may use the opportunity to reiterate that Fed is not done with the rate hikes and definitely not a lower terminal rate. And Powell will be the last to speak from the Fed before the customary blackout period starts. The topic will be outlook for US economy and the labor market. Of course, we will have on the radar ADP private jobs report, which is the curtain raiser to the unemployment picture in the US economy. On the currencies, dollar tried to gain further ground against major currencies, while it has slipped against yuan, as I said earlier. Eurozone inflation hinting at lower price pressures can bring the euro down with probably lower, terminal rates in the eurozone, but it's a bit too early to speak. And an atmosphere of lower yields has kept the USD depressed with profit taking seen in yen crosses. As we're stepping into the last month of the calendar year, after one of the most stimulus year characterized by whatever you ask for, the geopolitics, the war, the inflation, rate rises, bond market sell-off, and whatnot. So possibly the cry of relief from the investors as they step into December, and they would be happy to square up their books with whatever profits they have. So we may not have a very big trendy move, but we will probably see some squaring of positions and probably some volatility after the events as well. And on the rupee side, but not much to say because we are stuck in a very narrow range, and rupee is increasingly getting decoupled from the known influential factors like oil, DXY, and the Chinese yuan, and moving in a very narrow range. But we did have a positive news from India, like RBI taking a lead ahead of all other central banks in the world, introduced a mechanism of digital currency for retail users. And it is less than a month after the digital rupee trial was introduced in the wholesale segment. This significant announcement will allow people to use India's first central bank digital currencies for retail purposes. It provides an efficient, at the same time, a regulated alternative to cryptocurrencies. That's very important to note. I'm ending today's update with an evolving thought process in the global scenario. Some people are suggesting that the Fed should consider a compromise in its battle with the rising prices, and instead of imposing the full monetary tightening required to get inflation back down to its 2% target, why not increase the target a bit? So this is a very completely new thought that is emerging, but at the first reaction, most people are opposing it because it will speak of loss of credibility, both on the part of the government and the central bank. So it still is an evolving thought. So we'll keep updating you more on this as we get more official reactions. Thank you.
Okay, JK, and that's quite an interesting thought. I mean, instead of pushing economy towards recession, should they be moving their targets? Is quite an interesting development that they can start talking about. And if we talk about development, as you've mentioned, India launches e-rupee, the CBDC equivalent of rupee, which is kind of a very interesting development, folks. And as we all know, India is leading the race over here. So quite a lot of developments come around in our way, and folks, that is what Almus Rupee Money Conference aims for. A lot of things that we can see around in the markets, a lot of things that can work around in the markets. What should be the future developments? Basically, anything and everything that can develop Indian markets. And we are very glad to say 10th December is the day where we are hosting the Almus Rupee Money Conference. Do join us virtually if you can. We shall be updating about it on regular basis. On the update side, yes, we are expecting the Eurozone inflation data as well as the GDP data for the US, while the Asian markets were rejoicing a bit on the sizzling, or as JK mentioned, we've seen some bit of a sizzling performance, majorly on the backdrop of possible policy easing for COVID by the Chinese authorities. So that's that for today, folks. We shall come back again with another round of updates tomorrow as we begin the last month of this particular year, which has shown a lot many things to all of us. That's it for today. Thank you so much for listening.